Good morning. Welcome to Stock Market Today. It's Friday, July 26th, 2019. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. You can sign up there for a free email. Follow along with this show. Get daily stock ideas for you to consider in your inbox every trading day before the market opens. Special thanks to the team at StockCharts.com for hosting this show every day in the 9:15 slot. And a special shout out to the team at See It Market for posting our work every week and every day. U.S. equities closed lower in Thursday's trading. Energy, tech, and materials led the declines, while consumer staples and communication services outperformed, though all sectors closed lower on the day. Treasuries were weaker with the curve flattening. The dollar saw gains versus the yen and sterling, but was flat against the euro. Gold finished down 60 basis points, and WTI crude closed up 30 basis points on the day. As we get to the desk this morning, S&P futures are up 30 basis points after U.S. equities broke a three-day winning streak yesterday. Asian markets were mostly weaker overnight, though China did close higher. European markets are mixed. Treasuries are slightly stronger. The dollar is flat on the major crosses. Gold is up 30 basis points, and WTI crude is up 50 basis points. And as we dig in here, we see it. You can see the pause after a record-setting day. So after a record-setting close on Wednesday, market paused yesterday. Really, that's all we're going to kind of look at it as for now. Support remains in the 2,900 to 2,950 zone. We'll carve out some resistance right now in the 30.10 to 30.20 zone. RSI is in bullish ranges, but the small divergence that we mentioned yesterday does remain in place. What is a small divergence? A divergence is when a market or a stock makes a new high, but its indicator makes a lower high. So in this case, we're looking at the RSI, a measure of momentum. So the highs for the market from back in early July were surpassed on Thursday, but the RSI made a lower high. That's a negative divergence. It's something to watch. It's something to be aware of. It could be a signal that the trend is changing. But for now, we're just watching it because the market remains above that key support zone that we've been highlighting. And at the same time, Chaikin money flow is bullish and actually spiked higher. So indicators are mixed, although RSI still is in bullish ranges. So just something to be aware of, not something to be overly concerned about just yet. However, a break of 29.50 would put that divergence into play. So that's the level that we're watching for now, 29.50. Otherwise, we stay the course. Market in a minute. What am I talking about in my note today to Chaikin Analytics clients? Stocks paused after reaching all-time highs. Financials are beginning to show relative strength. We've been talking for some time about how we've been waiting for the financials to start to outperform the market, for the market to kind of recognize the bullish fundamentals that we're seeing in our 20-factor model. Early stages, but starting to happen. We're asking the question, too far, too fast in the near term for semiconductors. We're also asking, is value finally taking the lead from growth? We're going to take a look at those charts a little bit later in the show. And as we said earlier, futures do point to a higher open. So markets gave some back yesterday. You can see it here right across the board. Dow down 43 basis points, 7 bulls, 6 bears as we take a look at the power bars for the major markets. S&P 500 still nearly 2-to-1 bulls to bears, 140 to 72 after giving back 49 basis points yesterday. NASDAQ underperformed, down nearly 1%, 32 bulls to 12 bears. And, one day after seeing massive outperformance for small caps, remember? Yesterday we were highlighting the big move by small caps. In yesterday's trading, they give them back. A big underperformer on the day. 546 bulls, 306 bears. Bonds down, tick sending yields higher. According to the Chaikin Power Bar, large cap stocks and small cap stocks are bullish. Turning now to our stock of the day. We'll get to the semis a little bit later, but our stock of the day, MKS Instruments, MKSI, the ticker symbol there, closed at 86.55, down 3.3% yesterday. Power gauge rating is very bullish due to very attractive financial metrics, very strong earnings performance, and strong price volume activity. The stock does have some negative expert activity, but when we roll up the power gauge, the 20 factors, 5 in each of these 4 categories, we get a very bullish rating. However, market and model are not in agreement. Dynamic duo nodding here. That very bullish rating is met with a stock that's underperforming. On top of that, we're closer to overbought than to oversold. Money flow is mixed, but it's been more bearish than bullish of late. So we've had a nice little pop here, but I don't think we want to get involved. I dropped down the checklist just so you can see, right? When we talk about that weight of the evidence approach, when we run through our analysis, we've now given you a way to see that quickly and clearly. You drop down our checklist, you can quickly see that it's a mixed bag at best, and one of our most important factors, relative strength versus the market, is actually negative. So we don't want to get involved in MKSI right now, right? Nothing is for naught. We put it on a bullish watch list because of the power gauge rating, and we monitor these. But look, I mean, power gauge rating is strong, great. Relative strength is weak. Right there, we throw it out. We don't want to get involved. Industry strength is good. It is a semiconductor. However, overbought, oversold is neutral. Long-term trend is positive. Money flow persistency is neutral. There's just not enough here to get excited on the stock today. Let's add it to a bullish watch list, and then we'll come back to it or screen on it for other opportunities. Our sector tracker now. Looking at the movement of the major sectors over the last 5 days, industrials are at the top of the list, and aerospace and defense has been pretty strong within that group. Industrials up over 2% over the past 5 days. Tech, a market leader, and we like to see that. Largest weight in the S&P 500. We like to see tech at the top of this list whenever possible. We've been talking about the improving relative strength in materials. That continues to play out. Today, we're going to start talking about the relative uptick in financials. Energy, comms, and discretionary round out the groups that are positive over the last 5 days. Staples are underperforming, down 1%. Healthcare underperforming. REITs and utilities seeing some weakness as yields back up. And we've been talking about that now. It's starting to catch our attention. The bond proxies are starting to underperform the market. Real estate, utilities. So just something to keep in mind as rates are testing support levels. If rates start to back up, we're going to want to avoid these bond proxy groups within the equity market. Our industry in focus today, bank services. Over the past 6 months, bank services has underperformed, down over 7%. However, its power bar ratio, which measures future potential, is very strong. 56 bullish or very bullish stocks, 7 bearish or very bearish stocks. Currently ranked number 6 of 21 subsectors, and it's moved up 1 slot over the past week. What I will say is we'll see in the technical picture a little while, it's mixed. Right, some bullish names to do work on, not necessarily get involved today. First Horizon, FHN, Banco Popular, BPOP, and TCF Financial, TCF, all have very bullish cheek and power gauge ratings. But take a look at this chart. Here's the KBE, the SPDR S&P Bank ETF, the group in question. First things first, we can see right off the bat that the ETF power gauge rating from Chaikin Analytics is neutral. Neutral means, from a fundamental standpoint, we would expect it to perform in line with the market. However, look at the underperformance. Underperformance, and it's been pretty pronounced. This is just not somewhere we want to look just yet. Right? On top of that, we have a mixed picture from money flow, and we just have kind of a consolidation here from a purely technical standpoint, right? We are above the trend line starting to move higher, but you have some solid resistance right here at $46. I think that what you want to see is you want to see this ETF break above $46 and begin to outperform the market before starting to put serious money to work within the group or to actually own the ETF outright on its own. Overbought, oversold indicator is middle of the road. Just not a ton to get excited about just yet. Bigger picture financials starting to perk up, but these smaller banks, just not there yet. And that's been a big part of it. KBE, just not there yet. We'll take a look. We'll continue to monitor the situation because what the power bar ratio tells us is that the fundamentals are there. Now we're just waiting for the market to recognize them. Keep an eye on the banks as financials turn. Just not there yet from a trend and relative performance perspective. Let's look at yesterday's movers and shakers. A lot of this is going to be earnings related as we are in the heart of earnings season. MAS up 8% following their print. FTI up 6% on their print. LKQ 5%. Bristol Myers 5%. Big names making big moves, right? And then Raytheon, RTN. I talked about aerospace and defense within the industrials. RTN up 4.5% on the day yesterday. Loser side of the board, Align loses over a quarter of its value yesterday as their earnings missed expectations. Varian, VAR down 9.5%. AAL, American Airlines, down 8.5%. Ford gives back 7.5%. Nectar gives back 6.6% after giving a regulatory update. NKTR, only name on this group that is not earnings related, but their regulatory update did not excite investors. They took the stock down 6.6% on the day. Taking a look now at our earnings update. Yesterday's surprises. Newmont missed by 11 cents. Edison International, EIX, bullish stock within the utilities, beat by 43 cents. T-Mobile beat by 30 cents. A lot of moving parts to the T-Mobile story. A bit of a special situation given the tie-up with Sprint. CMS Energy missed by 11 cents. And Google hit it out of the park, beat by $2.72. That stock is trading up 9% in the pre-market. Other big movers, post-market and pre-market, a lot of attention is going to be paid to Amazon here after their report last night. Before the open today, we'll hear from Wyeth and Zimmer, both bullish. Neutral stocks of interest, Charter, McDonald's, and Twitter. Bearish name reporting before the open today, COG, Cabot Oil and Gas. Chaikin suggests caution when holding bearish stocks ahead of earnings. Here's what we were talking about now in the financials. This is big picture financials. The broad ETF, XLF, the Financial Select Sector Fund, has a bullish ETF power gauge rating at Chaikin Analytics, and it's been bullish for a while. Look at this power bar ratio, 39 bullish or very bullish stocks in this sector, only one bearish or very bearish stock. And here's what we're talking about. Here is that uptick in relative strength. Now, it's early days, and it could easily be a head fake like it was back here in June, but we're taking notice. All right, so we have a bullish ETF rating, and we have outperformance, or the initial stages of outperformance. Overbought, oversold indicator rounding higher after failing to reach an oversold position. That's kind of interesting to me from a momentum standpoint. Spike higher in Chaikin money flow to the bullish side. Fund is above the rising long-term trend line and threatening the highs from last fall. It would appear that financials as a group are finally getting into gear, right? And we've been talking a lot about insurance. Insurance has been leadership within the financials. To the extent that the big banks can get involved, that would give some juice to the sector. Take a look at XLF. Start to run through the holdings of XLF and run them through the process. My guess is you're going to find some opportunities within that group. We're asking here now, are we starting to see the breakdown in growth versus value? My takeaway is that it's too early to tell. So Russell 3000 growth versus Russell 3000 value. Growth has been outperforming value for some time. I mean, we're looking back a year. You can see a nice steady uptrend from those year-end lows. But look what's happening now. We're starting to see a little bit of a breakdown here. Still above the 200-day moving average. But what's interesting to me is that these highs up here, were not confirmed. Here's that divergence again, right? Overbought, fails to become overbought at new highs and actually makes a lower high. That is a negative divergence. That is the sign of a potential, in quotes, bold and highlighted potential change of trend. We're continuing to watch. For now, we still favor growth over value, but we want to be aware of potential changes as early as possible. So this negative divergence and this breakdown here has caught our attention. We're going to continue to watch it every day, and if a change of strategy is called for, we will talk about it. Finally, and we're asking the question, did we go too far, too fast in that move in semis, right? We talk about semis a lot. We love the relative performance of semis as a leading or lagging indicator, as a leading indicator for the market. When semis are outperforming, that's generally bullish for the market. When semis are underperforming, that's generally bearish for the market. We're looking at SMH relative to SPY, and we can see solid outperformance since the middle of May, right? Before the bottom in the market. And now we're threatening the highs, but we are overbought. So overbought, in this case, I'm looking at it as it's confirmation of the strength, but also a signal that we could see a pause in the near term on an absolute basis and a relative basis. Here's the absolute breakout. We're going to pull back now and see if we test and hold. Just something to keep an eye on. The relative strength in the semiconductors is encouraging. To the extent it continues, that is bullish for the market in our opinion. That's going to wrap it for today. ChaikinAnalytics.com/today. Sign up for that email. Follow along with this show. I hope you all have a great weekend. We'll be back on Monday.